Financial Secretary John Tsang has announced further measures to curb short-term property speculation and reduce the risk of asset bubbles forming. He said the price of flats of less than 70 square meters grew 8.1% from March to September, rising quicker than larger flats. The affordability ratio has increased from 32% in the fourth quarter of 2008 to 42% in the third quarter this year. Property transactions in the first 10 months of this year grew 70% compared with the same period last year. Short-term resale transactions are increasing rapidly. In the first 9 months of this year, the number of resales within 12 months increased by 114% compared to the same period last year. 84% of cases involved units priced under $3 million in the first half of this year. To curb short-term speculation, residential properties bought from November 20th and resold within 24 months will be subject to the proposed special stamp duty payable by the buyer and seller. The special stamp duty payable will be calculated based on the consideration for this resale transaction at the following regressive rates from 5 to 15%. The Inland Revenue Department will keep all residential property transaction records until the date of legislative amendments take effect, to identify the parties liable for special stamp duty. Demand notes will then be issued after the new legislation launches. New measures include disallowing deferred payment of stamp duty, including special stamp duty for residential property transactions of all values.
These initiatives are extraordinary measures under exceptional circumstances. The effects of quantitative easing, combined with other abnormal influences on our property market, are far from over. We will introduce further measures if circumstances so warrant in the future.
The Monetary Authority will also introduce further measures to enhance risk management in mortgage lending by banks in Hong Kong, which take effect immediately.
We are very concerned that the housing market and consequently the mortgage markets will become even more exuberant, thereby exposing the banking system to higher risk.
For residential properties with a value of 12 million or above, the maximum loan-to-value ratio is lowered from 60 to 50%. At or above 8 million and below 12 million, the maximum LTV ratio is lowered to 60%. The maximum loan amount will also be capped. For all non-owner-occupied residential properties, properties held by companies, and industrial and commercial properties, regardless of values, the maximum LTV ratio is lower to 50%.